Greg. Everyone just jumping in here. Very nice, very nice. Okay, we are looking at futures market. Pretty flat on the morning. Futures flat, NASDAQ futures flat, Dow futures up 0.14, Russell futures up 1%. Okay, volatility has made a stealthy run this week above 16. 14.45 VIX all the way up to 16.7. That's not nothing. And the markets really haven't gone anywhere in 2 days, 3 days actually. Count last week, Friday, after a kind of a blistering Thursday. So Friday, Monday, Tuesday, very limited price action. VIX is up 15.79%. So certainly something to pay attention to. Puts our VIX at 16.3. Looking at the daily profit play indicator, let's center this thing around 6606. See what type of levels we're getting today. So we'll go manual at 6606, which is the close from yesterday. Okay. So we want to write some key levels down. Let's get our VIX calculation. So 16.3, that's going to put us just over 1%. 1.02, I'll round up at 1.02. So from close, 1.02, there's your VIX top. That's why I love this indicator. 6670 to 75, 6670 to 6675. Potential top. And let's go 1.02 to the downside. Obviously, if the VIX is going to go higher, the downside could be a little bit threatened. So be careful on calling the bottom unless you're going further out of the money than what the VIX box has given us. 1.02. Looking at 65.40. Okay. So highs and lows, that's if we get a big directional day. A lot of times FOMC days are noisy. A lot of volatility. Price goes up, price goes down. We have a plus or minus on the day. I think 40 something going into the session today. Plus or minus 42.99 for today. I would still think that's on the conservative side for like the high low. I think that we might see prices get to 50, 60, 70, 80 points higher or lower. Just a matter of whether or not we find a low to reject off of or bounce off of, or a high to reject off of. Okay. Let's see here. Yesterday was Tuesday. We finished up a 2-day masterclass for daily profit play. So that we should be able to get that second class posted. I also had some notes posted in your daily profit play alerts Telegram. So you can click on these images. These are the notes that we shared during the live class. I'll zoom in here. It's kind of our basic daily profit play and the difference between a standard daily profit play and reverse daily profit play, as well as what we've been sprinkling in here lately. Some broken wing butterflies. I'm doing this. I'm calling the ceiling on some of my trades. So 6640, 6700, 6750. Hopefully those are some income trades by the end of this week and the end of the month. Okay. Let's see what type of volatility we get today. So we are just at this 6600 level. I'm going to say if we have and this is a big if we have a 3-drive pattern, if we have a rising wedge, these are kind of topping patterns. If this is a 3-drive pattern, 1, 2, 3, 4, 5, usually this ends up making its way down, sweeping this low. I keep saying this low, 63.60, 63.45. If we sweep this low, expecting an ABC correction. It's not a top that is, rattling the markets and selling off forever. It's a topping pattern that gets us a correction back to where this started. So my, kind of buy the dip would be down in this area where it all started. I think price has room to get back to 6,000. I think that we could find some of these deeper moving averages, but even a pullback to the 50-day for starters, if we have a 50-day pullback, lower high, lower low, this is a 100, see my mouse, 100, 144, and 200 moving averages. Okay. So now at this stretch point, we are 238 points away from the 50-day. That's 3.6%. It's a pretty good correction. I mean, it's a pretty healthy correction if we get that. If we're coming down to maybe the 100, that's a 6% correction. The crazy part is coming down to test the 200 is 9%. So these are all dynamic support levels. I'm just thinking, we've had suppressed volatility for a while. Uh, does it open up the floodgates and we see the market, similar to what we had back in 2024, which is a couple of flushes in volatility. This little 5% rollover, this little 10% rollover, 3 to 4%, 3 to 4%, 6%. We had some rollovers in 2024. The market's still maintained a bull market. 20% flush. It's like, does it just get it out of its system and the market never knows how to pull back ever again? Probably not. I think we'll have a pullback. Is today what kind of signals it? Maybe. I mentioned this yesterday in my final hour session and yesterday in the daily profit play live session. It's price action. That's really what we're gonna have to watch and wait and see. A lot of times FOMC is a noisy day. Okay, so expect volatility. We have had 3 very quiet days. Okay, which has been great for daily profit play. 3 very quiet days and 3 really nice winners. We had, I'm trying to think. So yesterday, trying to think. I took a new broke wing butterfly in the morning. I took a new broke wing butterfly during our live masterclass. We had winners on daily profit play. We had bear call spreads, broke wing butterflies. We sprinkled a couple things. We had some nice winners. And then I ended up having 2 trades on double ups. I had it was a net winner. I ended up grabbing like $110 on one trade and only lost like 30 or 40 on the other. So it was net per contract about 50 or 60 cents. And it's funny. I talked about that positive negative gamma flip zone at 6,600. I should have just pinned that. I should have pinned 6,600. That would have been a nice payout yesterday. Had I gone, I guess if I went like 10 wide, it would have paid pretty nicely. If I went 15 wide, it would have paid extremely well. But anyway, I wasn't sure if we were coming down to here's 6,600. We finished 6,606. So that was enough. But interesting close to the day. I had prices pinned between like 25 and 95. So I was able to manage the winner on the upside actually right here. This trade gave me about $110 on the butterfly spread here. And then this trade at the end of the day was only down, I guess when it was pushing lower right before the close, it was only down about $40. So I ended up taking a look at the winners here. I think it was like 100 and some percent. Look at that was on double ups. So double ups yesterday and pinch point. We had some new trades yesterday with the scanner. Double ups, we had an 80% winner and a 40% loser. So ended up netting 40% return. Not bad. Okay, good stuff. All right. And then trades on FLR, INTC, DIA yesterday with pinch point. Let those marinate. I'll double check that today also for watch list Wednesday, see if we have more popping up in the scanner. Yeah, we'll have a look. Here are the gamma levels that I see for the day. So 16.27. I've got a 66, 70, and 75 top. So I'll put this in here as well. And a 65.40 bottom. So 70 and 75 potential top and 65.40 potential bottom. Bigger gamma level today is down to 65.90, possibly a gap fill from Friday. That's initially, right? We're looking at a plus minus about 40 points today. So based on the, I'd say the open, because we're going to be pretty flat. Futures is 0, so we're probably opening right around the close. I think a standard daily profit play should be okay this morning. Usually we don't see a lot of front running, a lot of direction right out of the gates during an FOMC day. A lot of it is just make sure that everything's looking good for 2 p.m. So I don't want to be in my sell calls and sell puts going into the afternoon. I want to be out of these trades this morning, right? So what I'd like to look at is, I think a standard daily profit play today is fine. I just don't want to see price move too aggressively. Are we coming from '06 down to 90? We've got a plus minus 40 on the day. So hopefully, even giving ourselves 10, 15, 20 points of direction isn't going to threaten our trade with time. But a lot of this, and this we've seen this before in daily profit play, it's a sticky volatility day. A lot of it just kind of completely hinges on FOMC, right? So what should be, and truthfully, it should be like a pretty steady time decay curve. But for some reason during FOMC, it's like this. I'll put this in blue. It's almost like this goes a little bit longer through the day. And then after FOMC, it gets very aggressive. So it still works. We've, in fact, a lot of the trades that price is choppy during FOMC mornings, we still make money, but rather than getting out at like 10 a.m., sometimes it takes until 11:30. Okay, so we'll assess that in about 15 minutes. All right, what else we have here? Good afternoon, Lee. Vladimir, what's happening? Tom, you get on those gamma levels? Let's see here. Larry says last three FOMC days, SPX haven't moved till after the announcement, but I noticed that the IV. Yeah, I agree. Yeah, Edward, if we did the reverse, then we're gonna have to sit on that thing for the day. That's and again, there's a positive negative to that. The good thing is later in the day. Let me just let's say we're gonna open up at 66.05. I'll build one out. Let's go to options strat. Okay, and I'll build one out. So if we did Iron Condor for today on SPX, we're opening around 66.06. So I'll do let's say 90 and 95 and maybe the 10. Okay, so about a 20-point dead zone like this. So it depends on what we're going to be given today. I don't want to take this trade. If I'm going 20 wide for my dead zone, I don't want to take this trade for less than probably $5.90 to $6 credit. $6 credit, I'm good with that. If this is only offering like 550 or 560, I'm probably going to pass on the trade. I mean, same thing with daily profit play, the regular strategy. I mean, I'd like to at least get $1 if I'm going 5 wide. So same thing here. If I'm going to risk, the dead zone at 20 wide, I want like $5.90 to $6, 6.10, 6.20, something like that. So here's the good and the bad. If we take this trade, right, let's say price doesn't really go anywhere. A lot of the drama is happening this afternoon. Okay. Zach, the tasty. So you have the trading view indicator, and you also have Thinkorswim. It's already in your classroom. You have the indicator right here. So this indicator on TradingView is inside your classroom. There's a text script you can put into your Pine editor. And then in Thinkorswim, I have the download code for the grid. So you can open that as a shared file or shared item, and it'll actually pop up the chart for you. So you can have TradingView and Thinkorswim. I'm looking to see if the Tasty Trade team will put it in their charting platform, but they also recommended that you can just open up your broker platform through TradingView and use the indicator that way. Okay. John says, I'm worried about Jackson Hole kind of move. It's usually not like that. FOMC is usually way noisier than that. Jackson Hole is kind of a one-off thing. It's also summer. You have to remember Jackson Hole in August is a very different time of the year than September. September, everyone's back to work. Kids are back to school. Markets are, we know that the markets are highly anticipating this FOMC event. But I wouldn't imagine it's going to be a one-sided move. And if it is, it's likely not going to be one-sided until 2 p.m. So that does give us kind of the morning to play with. I think that, we take a stab at it, let time decay. It might take until like I said, 11 a.m. this morning or noon. But if we want to do there's two ways we can tackle this. I'm already thinking like, okay, if we want to be a bit more aggressive, here's what I would consider. Could we go as high as this potential VIX top around 66.73 or 66.70? Could I put in, some bear call spreads up here and look to see if price actually responds? Now, one thing, it's Wednesday. I think that we know market makers are still pretty good at their jobs on Mondays and Wednesdays, especially good on Mondays and Wednesdays. FOMC days, in my experience, are rarely directional. Usually, if it's direction from 2 to 2:30, it's the opposite from 2:30 to 3, or it's the opposite from 2:30 to 4. Or think of it this way: from 2 to 3, price is moving one way; from 3 to 4, they move the other way. And at the end of the FOMC session, it's basically a big ol' indecision candle. So if we're managing direction, if we wanted to do a reverse iron condor and we're managing direction in any type of move, we've got to manage that trade. Okay, so this is what I want to show. If we built out a reverse iron condor that looks like this, okay, that's our dead zone. We need to get through this 20-point dead zone. Now, like I said, I'm trying to at least pull in like $6 credit, hopefully. So this dead zone is only $400, and we'd have $1 on each side of the trade. If we took this back to 2 p.m., okay, if we take it back to 2 p.m., you can see there's still a sag in the middle with the dead zone. If price is up to 66.30, okay, we're at break even. If price is at 40, 50, or 60, we've got some profits. Now, if obviously I can increase my credit, this is going to be a larger profit. Okay. So if we have like a 20-point move, we're probably going to see some profits by 2 p.m. If we go to 2:30 or 3 o'clock, if price is out of the dead zone, we're going to be able to manage some profit, right? So we don't need a huge move. We don't need 40 points. I mean, this is 6,600. This will be up around 20 to 30 points. We can manage some profit. 20, 30 points, we can manage some profit. Okay. But by the end of the day, you just want to be out of that 20-point dead zone. So are we going to stay at 6,600 today? I would hope not, but I don't know. I mean, there's clearly some indecision here these last couple of days. If the market breaks through the floor, are we breaking the floor, taking out a low, and then there's room to fall? Well, directionally, a reverse iron condor is great if we break the floor. Directionally, a reverse iron condor is great if we break the highs. Okay. But we might have to be managing this trade prior to close in case price goes up through the 2 p.m. announcement and then down through Powell's press conference. And if it's in the dead zone, you don't want to get stuck in that dead zone, right? So if we have profit to manage here, I would probably take the profit. If we have profit to manage going down, I'd want to manage the profit. I probably don't want to hold that thing all the way to close unless it's such a big move one way or the other that the probability of coming back into the dead zone are pretty slim. Okay. Aggie, who's that question for? Is there an indicator available for daily profit play? Yes, I'm showing you right now. This is the indicator. It's available on TradingView and Thinkorswim. No. David, that iron condor credit of 550? No. That is a credit of 550, and you're going to get the excess of the $5 spread. So we discussed that yesterday in class. So the reverse iron condor, if I get 550, I would keep the 50 cents. So I'm risking 450 to make 50, which is why I don't want the trade for 550. I want the trade for like $6. That way I can get $1 to risk 4. Okay. 85.90, 55.50 DP, pros and cons. Yeah, I mean, I think that's a pretty good trade. I think this. All right, look, I'm just going to map this thing out. Okay. Morning strategy. All right. Morning strategy. If price is calm, and I put calm because under the surface, it's like price is going to be like terrified. It's like there's so much volatility that's probably going to happen today. If price is calm this morning, a standard daily profit play is fine. The IV is generally sticky during major news, especially FOMC at 2 p.m. So it might take longer for time decay to close out our winner. Okay. So that's a pretty simple approach this morning is I just let the market chop around. We enjoy that trade. With the plus or minus high enough, we look at a 15 or 20 delta, see a price is not going to move, and we take on manageable reward and risk. Okay. Which is not a bad play because by probably 11 a.m. or 12 noon today before FOMC, if price hasn't made a directional move one way or the other, we'll be fine. Okay. So that's a good morning strategy. If we think there's going to be a directional push where we're going to get outside of this 6,600 dead zone, then maybe down to 90 or 95 or up to 05 or 10. If we can pull 580, 590, $6. I will say this: if the reverse iron condor is only going to pay like 550 or 560, I'm not taking that trade. All right. I want like 80, 90 cents. I want $1 potential profit. And then I just need some direction. But that would be something I can manage later in the day. So if I take the trade in the morning, let's say I can get a $6 reverse iron condor. That means I can make 1 and risk 4. All I need for the end of the day is price to be above or below directionally. Okay. So either way, I mean, one thing with FOMC is it's probably not the best day to be over trading, right? So if we get a morning strategy that pays us, be happy with that. I like the idea of the 150 to 200% bear call spreads. But if I did those for the day, I might be more interested in doing those for tomorrow, not today, because what has happened. Like it's easy to recall because the last 2 Thursdays, what did the market do? And this isn't Thursday. I'm not saying that, but I'm saying during a 0-day trade, if price finds a way to go to this high and it closes there, there's little to no backup plan if it doesn't reject. Okay. So my least favorite days with 0-day trading is that price goes to a high for the day and closes at the high, or price goes to a low for the day and closes at the low. That's not fun. But the next day, we generally see prices either calm or bouncing back up to find some equilibrium. So what I'm looking at is possibly going to this level, okay, and looking at tomorrow's expiration for a credit spread, or going down to this level. This one I'd want to be a little bit more leery of, but certainly on the upside, it's like if we go grinding higher, I don't think that we have a huge rip to the upside. I think it's going to be more of the slow and steady, slow and steady, slow and steady rally. Okay. But if we fall, looking at a 50 to moving average at 3+% lower, looking at the 200 moving average at 9% lower, if the market's going to make a correction and this is the window from September to October, we're not going to fall slowly. I would imagine we're going to fall pretty quickly. This market, dumps whatever it needs to dump. And I think buy the dip or look what happens elsewhere. What happens on the dollar this week? What happens with gold this week? What happens with silver this week? All these assets have been running pretty hot, right? I mean, gold has made an incredible run these last couple of weeks. This is the end of August. I mean, this is in a range. This is a range from April, and then we finally broke out in August. So we're at all-time highs again on gold, silver. Some volatility here. I like buying silver into these dips. So any pullbacks into these moving averages, I think silver's still a great buy. I will plan accordingly. Any dips into 39. I don't mind taking additional shares of silver. I think we have a pretty locked in target around $48, $49. Okay. All right. So it's officially open to bell. Let's see how things kick off. We're likely looking at a open around yesterday's close, so it shouldn't be a lot of drama that way. Let me delete that chart alarm. We'll set some new ones this morning. Okay. So price just kind of settle in here for a moment. David, I don't, because we've done the numbers on that. 0 days are just too sensitive. So that's why I manage risk based on the size of my spread. We've talked a lot about that. When we first started this course, I was, 20 wides and 15 wides setting a stop loss. 0 days are just too sensitive. If you get if you get a 10-point move in 5 minutes, you're going to blow through your stop. I was using a 100% stop loss on the premium. It worked for a while for us to take wider spreads and get filled really quickly for credits, but it was also slippery through the stop loss because if the market price blew through it, you don't get filled. You don't get filled exactly where you want sometimes. So I thought it was better just manage the risk based on the size of the spread. I think that's a better trade. Okay, so what I'm going to wait for is I'm just going to wait a couple of minutes to let price just kind of sink in for the morning. So we're getting a bit of a directional push here. And I'm just going to let that marinate. Let me bring up, let's look at some additional gamma levels and liquidity levels here. I'm going to take a look at also a reverse iron condor if I want to manage some of that direction. So we can go 66. This would be the bear call spread in the money. And then the 20. So right there, a reverse iron condor only offering 540 or 550. That's a terrible trade. Okay. Good trade as far as like the mechanics of it, but going 20 wide and only getting 550 for it is not the fill that I want. So I don't want to go higher, right? Now we have a 25-point dead zone for 580 or 560. It's like, I'm not taking that trade. So reverse iron condor is off the table today. If we go to our gamma levels here, check this out. Look at how wide this area is today. Okay. 66.75 on the upside and 65.50 on the downside. That's kind of the VIX levels that we talked about. The reason I also built my daily profit flow indicator is our ATR percentages. It's very rare that we're going to see price going greater than 100 or greater than 150, greater than 100, greater than 150, especially starting here at the open. It's very rare that we're going to see price go there for the entire day without having some type of rejection or bounce. Okay. All right. So it does seem like price is cooperating a little bit. I think I'm just going to look at a 5 wide iron condor. Let's see what happens. So if we go 55 and 60, that's a 19 delta. And let me match that on the put side. Here's an 18 delta. Get a $50, $60. See if price can stay inside here for a while. So let's go $55. $50. Okay, so I'm in for a $1.50. I'll type this in the chat. So I'm doing a higher delta. I'm going like 18 delta. I'll punch this in. So new trade. This is for the morning. So 9/17 expiration. Call side is a 66.55. And I'm only going 5 wide to manage risk. So 66.60. And the put side is 65.55. So I pulled in a $1.50 credit. Standard daily profit play, 150. Max credit. Looking for, I'll look at the numbers here. And 350 max risk. All right. So if I pulled in a $1.50, so take off 40, so $1.10 or lower. So if I go take profit 110 debit or lower. Okay. So I think that's a good way to get started. It's pretty good credit, higher deltas. I'm looking for price to be a little bit choppier this morning. From center price, I mean, we're at 08. I'm still, 40 plus points higher, and I'm still 50 points lower. So I mean, if price is just relatively calm, we should be okay on that trade. So that trade in for a $1.50. And let's see if we can set a 110 or $1. I'm going to look to close. I'll set this thing at $1. See if we can grab some profit on that this morning. The price is pretty calm. Uh, David L. Wanted to get back to your question. So we've spent a lot of time discussing that in these master classes for this strategy. Like I said, when I first started out, I was looking at a 100% premium stop loss. I considered a 200% premium stop loss. We ran the numbers on that. We did the testing. Mechanically, it works out about the same. What that allowed me to do is if I wanted to take like a 15 wide or 20 wide spread, I can set a stop loss. The difficulty was when we encountered some bigger directional plays in a 0-day environment and it blows through that stop loss. So rather than taking a managed loss, all of a sudden I'm taking on hundreds more dollars. And sometimes my losses is like I should have had a managed loss of maybe $500 and it would be like I'm losing 900 to 1,000. Well, that's not really my plan, So it was easier for me to manage the trade with define the risk with the spread. So even if price went all the way through my tops or all the way through my bottoms, it can't go more than the width of my spread, right? So if I just ended up settling into a lot of 10 wide trades. That became a pretty good way to kind of set risk where I don't have to manage a stop loss now. Price and sensitivity of 0-day, it's testing showed that I mean, actually live trading as well. But testing and live trading showed us that if we just let price be price, if we let market makers be market makers, usually by the end of the day, we have a lot more winners and losers. We increase the win percentage by just letting price go through the day. So, like I said, if you can manage risk with the size of your spread, that tended to help. Okay. All right. So I am in for daily profit play this morning. I'll put this in the tracker as well. We do have some broke wing butterflies. I put in a live trade yesterday that's out to the 30th, another trade out to the 26th. I know we have a trade this week that is a 66.40 pin price, 66.40 pin price, and that is by Friday. So I'm hoping that price doesn't want to make new highs. Also, by the end of the month, I've got 66.40 on a waterfall income trade. So I certainly want to see that this kind of puts in a near-term top for either this week and the end of the month and the end of the quarter. Hopefully I'm right. I think we're coming into some key expirations. I think Friday there's a VIX expiration today, and then Friday is a triple witching. I think there's index expirations, stock expirations, futures expirations, all on Friday. And again, that doesn't really mean anything. It's just there's just a lot of money and a lot of expirations that are on Friday. So sometimes that means that we see like a wild Thursday, and then Friday just I don't know. Some of those triple witchings and quad witchings just like are lackluster and kind of duds, but it's just a lot of stuff that's floating in the background. Okay. So good. Keep an eye on this for this morning. If I see this up 40 to 50 bucks, I'm going to take it. That's the trade from this morning. So let me get this into the tracker. So center price is 66.10. 66.55, 60. Yep. 65.55. Okay, so we're going 5 wide, pulled in $1.50 credit. Okay, so let time do its thing. Like I said, this one is a broken wing for Friday. I want price to get back below 66.40. This is a broken wing for the end of the week, also 66.85. This is a broken wing towards next Friday, 67.65, which is way out there. 67.60. One thing I would consider looking at today, if you're interested, if you missed out on some of those trades that I posted this week, so the 26th and the 30th, I don't mind going maybe even to October 3rd. How high up can I go for an October 3rd expiration? So right now, if I build this out on the call side, okay, I have a 6,700 right now. That's a 30 delta. That's quite a ways up there. If I go out to the mechanical, like a 20 delta, 67.60. I mean, again, there's risk on all these trades. But if I looked at 67.75, that's a little bit more risk, I believe. Like this isn't a bad trade. I mean, we're at a 17 delta. Let me move this down one strike. So risking 12.80 to make $2. Risking 8.95 to make. I mean, this if I get filled for a buck on this one, I might take the trade. See if I can get $1.10 on this trade for October 3rd. If I get $1, I'm happy. $1.10, $1.05. Come on, $1.05. Come on, the mid price is trading at 115, man. All right, let me try for a buck. A buck should fill. A buck should fill. All right, so I'm adding another trade here. This is an October 3rd. I'll sprinkle this in. So today's the 17th, but I'm going out to the end of the I'm going out to non-farm day. So SPX 9/17. Actually, the expiration is going to be 10/3 expiration. Buying the 6780. Crap. The heck. Sell the 6790. So I got a 10 wide profit trap as well, which is kind of nice. And buy the 6810. Okay, so pulled in $1 credit on that trade. So the mechanics of this one, this is a broken wing butterfly. I do have a potential $1,000 profit trap if prices between 67.80 and 90. Our break even would be 6,800. So if price goes all the way up to 6,800, we're still not losing money on this trade. We have a potential profit trap in here as well. So that's the broken wing. We talked a lot about this yesterday in the masterclass. I have credit, I have my profit trap, and then I have my risk. So as long as price is here, 66.06 is live price. This ramp up would start at 67.80. Okay, we have this perfect pin price at 67.90, which is a 1, 2, 3, 4, 5, 6, 7, 8, 9, up to $1,000. Even over here at 91, 1, 2, 3, 4, 5, 6, 7, 8, 9 bonus trap. And then we have break even at 6,800, and risk would be at 6,810. So I collect $1, have potentially a $10 profit trap with sprinkled in bonuses. Again, that's at expiration on non-farm day. Okay, I'll post in Telegram. Give me a second, Bill. So adding a new broken wing butterfly. SPX 10/3 expiration. Buy the 6780. Sell the 6790. And buy the 6810. So $1 profit if SPX is less than 6780 by expiration. 10 wide profit trap between 6780 to 6799. Break even is 6,800. And then risk would be $900 risk. $9 risk if price is greater than 6810 by expiration. All right, trades in. If not filled yet, how far should I chase price? What trade, John? Which one? The one that I just took? Oh, the Iron Condor. I mean, what's the trade? Iron Condor that I did. You can just go. I mean, again, this is why I held masterclass on Monday, masterclass on Tuesday. You just go find your deltas, right? You can always find these deltas. So go to your broker platform, go to your options chain. Here's the 17th. On the call side, If I'm looking at 66.50, that's an 18 delta or a 16 delta. These are fine. 66.50, 5 by 60. That's a bear call spread at a 16 delta. If I go to the put side, 17 or 15 delta. I mean, you still get $1.30, $1.30 to $1.35. It's a good trade. It's a good trade. So I actually don't mind adding this position. Let me go one. That's a 17 delta. It's an 18 delta. It's a little closer on the call side. I'm going to take another trade here for another account. $1.30. I just need some time. Let's see if I can get $1.30 on this. No, that's up to $1.50. Interesting. Let's try $1.30 on this one. Okay, $1.35. Actually, well, I'm taking a different account, so I just want to make sure there wasn't an overlap, but it seems to be there was an overlap with that trade. So if I'm looking at the trade from scratch, let me just say this. Trade from scratch, I don't mind the 66.50 and 55 on the call side. Or if you want to go to a pure 15 delta, do 66.55 by 60, and then find your 16 delta or 14 delta on the put side. That's 65.45. That trade still offers $1.20, $1.25. Same mechanics, going after 20, 25, 30% take profit. So trade still valid if you have to, put it down by 5 cents. It's okay if you have to tweak the legs and, make it more delta neutral. That's fine. Okay. But so far we should be looking pretty good on our trade. And again, I said that time is usually very sticky here. So this is going to be so DPP, Broke Wing Butterfly. That one's out to October 3rd. So I have this October 3rd at 6,700. I've got this one at 6,790. It's like I really like this trade. I mean, I'm hoping I'm right. I mean, obviously, I said this yesterday in my live session for YouTube. I'm like, I actually have a decent amount of short-term risk to the upside. If this market just freaking melts up and it's another 100 points higher by October, like I'm definitely taking on some risk, which is going to annoy the heck out of me. Just because I don't know how we can go 90 plus days and be 250 points above the 50-day and not pull. It just drives me crazy that this market seems like it's broken. Like technically the market's broken. And I just took this yesterday. This is interesting based on some of these streaks. I've got this screenshot here. Give me a second. Longest win streaks in history. SPX 15 days in a row. This happened in 1971. NASDAQ 19 days in a row, August 31st, 1979. NDX 19 days in a row, May 24th, 1990. Meta, which I remember this one vividly, 20 days in a row, February 14th of 2025. I shorted Meta on that 19th day. Worked out just fine. NDX right now has a 9-day streak. So a lot of these longer win streaks typically end pretty badly. So I just think the market is timing wise, it's ready for some type of pullback. All right. So let me go back to previous close here. There we go. And the VIX didn't really change much. We kind of manually, I used the indicator, put it manually on yesterday's close. So we're about the same. So 66.70 to 75, which where I have my top on the VIX box, and the 40 is the potential bottom. It also lines up nicely where the VIX box kind of stretches to the ATR levels as well. So all we really need to see for this morning's daily profit play is the price just stays within the 50 percentages, the 50% ATRs, we'll be good. Just let time do its thing. When do you sleep? I mean, I sleep fine. I sleep at night just like everyone else. We get the baby down to bed around like 10ish, and I don't know. I think I have like 30 minutes to 60 minutes to myself. I usually fall asleep on the couch because I'm exhausted, and then I go to bed. I'm telling you, like this is so much more manageable now. Trading, managing a portfolio that's heavy equities, indexes, and options that has opening bell, closing bell versus what I had before, which was a decade run in a currency fund that I felt like I never slept because that's a 24 five and a half market. So I had many of nights where I would be falling asleep in my office. It's 2 in the morning Eastern time, and I'm waking up to check on the pound Aussie. I'm checking to see what the London session is doing. I mean, when I first started trading currencies back in like '07, '08, I was an analyst and I ran the London session from Florida. So I'm up at 2 in the morning every morning. Like that was a terrible, terrible schedule. So I mean, even though I'm in Utah and opening bell technically is like 7:30 my time, it's no big deal. So it's a lot more manageable to have that kind of balance of like, market's going to be here tomorrow. We have opening bell, closing bell. We just trade for what it is. Okay. Tron says we're trading 23 hours a day commodities until recently long hours. We're trading futures, Tron. Are you US or non-US? Yeah, futures, same thing. Futures, you can trade 23 hours a day. I've got a couple of heavy futures traders in my Discord. And I'm not, they trade like, they've got a plan. I know they have a plan. Um, but they also sprinkle in like lots of trades at, 8 p.m. Eastern time. And then it's 5 in the morning. And I mean, I guess it's whatever suits your schedule. Some people say, yeah, Forex is super convenient because you can trade anytime you want. I agree somewhat, but I don't agree with the windows of opportunity always being random. It's like I think that there's a lot of order flows that come in London session, US session. That's mostly when you get your volume and volatility every single day. So for short-term traders, I think you have to trade those very serious windows. I ended up going away from day trading and scalping in the currency world to way more of a position trader. My story is it's pretty crazy. It was one gentleman that I met on the golf course, and this guy just drew. He drew up a trade on a napkin. Like we're in the 19th hole essentially. We're sitting there having some wings and beer after the round, and on a cocktail napkin he draws out what he's going to do with the euro dollar trade. It's going to take him maybe the next year. This is his positioning, how he's going to do it. And I saw the guy just draw it up, and he was going to risk $100,000. That was his risk on the trade, and he turned $100,000 into over $1 million in like 8 months. I mean, that opened my eyes to like a whole new planet of trading. Position trading. He called a massive, topping pattern essentially and leveled into it. And with leverage like Forex at this time, when this was 2007, 2006, 2007, 100 to 1 leverage for U.S. traders, and he crushed it. I mean, I think 8 months later he had like $1.1 million. He already had a house picked out in the mountains to buy. I'm like, this is amazing. So it changed how I traded like instantly. I went from being a 1 minute scalper day trader trying to make 10, 20 pips a day to, closing out trades that would take months, but it would be generating 10, 20,000 pips at a time. That made trading a lot more enjoyable. That gave me what I felt was a better balance. I managed risk a lot better. So I didn't, get the paper cuts like a lot of people experience when you put your stop loss in the noise and you get stopped out and wicked out. It just drove me crazy. So yeah, it changed a lot. No, he really just was like a big position trader. So he just leveled in 100K. Yeah, 100K with 101 leverage. So he was in for, I don't know. I mean, I think he was in for like 10 lots, and the euro dollar at that time moved like 1,000 pips. So there you go. Like we crushed it. So here's what I want you to make sure you're very clear on for that story. Everyone hears that story and they're like, what do you do? What was the trade? What was the strategy? How much money? The guy had like $5 million to trade, and he was willing to risk 100 grand. So it's manageable. I mean, so $100,000 out of a $5 million trading account, he was risking 2% of his account to take that trade. But because of the leverage, because of the position sizes, because he added to his winners, he generated a ton more than his risk. And it was to me like what changed everything about how I traded moving forward. So I went from being like I said, 1 minute, like line up the 1 minute, 2 minute, 3 minute, line it up with the 60 minute. That's the biggest time frame I looked at, trying to scalp 10, 20 pips a day, to then just position trading. And I would just scale in. So, I don't know, some of my biggest trades over my career in currencies, this Aussie New Zealand alone probably helped me generate a couple $1 million. Um, I was big into this trade when we broke the floor here at 105. I was at 105, 4, 3, 2, and 1, and it ripped all the way back up here towards 114. I took profit at this high. So I was in for 1, 2, 3, 4 standard lots up to the upside. And that net position was good for about 500 pips. 500 pips. And I think collectively between the accounts I was managing and my own, there were probably close to 50 standard lots running. So that worked out pretty nice. That was like a 200K trade. And I did the same thing like the next year when it was back again. I leveled in again, took some profit, leveled in again, took some profit, leveled in again, took some profit. Like there were 4 trades on this currency pair that were, upwards of 6-figure profits. So I was very fond of the Aussie New Zealand for a long time. Um, I've had some slippery trades. I've been fortunate in currencies that have never blown up an account, but a lot of it was because I just traded very small. I traded very small. I'd scale into my levels, and then it would take months. But what happened to me is currency wise, my P&L would look something like this. So if I did, let's say for the month, let's say this is January, okay, and this is December, January to December, I would have like no profit, no profit, no profit, and then I'd make like 8%. And then I'd have no profit, no profit, no profit, and then I'd make like 4%. And then no profit, no profit. And I had like 3 or 4 months where I make all of my money. So it was fine for me. It was fine for performance, but it was a very difficult way for me to feel like I'm managing, capital month. I mean, I don't manage month to month. Like everyone asks me, what's your expected profit for the month? I don't have a plan. Okay. And I don't think that's a bad thing because what my plan is, my expectations are, is I trade what is a good setup. So at least now with stocks and indexes and options, I just have steadier income. Because I'm very active every single day, every single week, every single month, and I'm just sticking to probabilities. So the nice thing about options is I trade price and time, and I don't have to worry about the flake out, like poke the highs, poke the lows. I don't have to worry about stop losses. There's already defined risk, and it's also a 9:30 to 4 p.m. where it's not 24 hours a day. Okay. Let's see here. I like commodity futures, but like the additional opportunities and equities, limited hours. Yeah. Well, I mean, like futures. I mean, if you are limited to the hours in trading equities and indexes, you can trade index options. I still like to trade ES. I mean, technically, trading futures is a little bit more capital efficient. You can trade 23 hours a day. You can trade S&P futures. You can trade Nasdaq futures. Again, you can make trading fit your needs, which is not a bad thing, right? It's not a bad thing at all. So anyway, how does GLD figure into your thoughts on a pullback? I totally expect a pullback. I'm still buying dips though. I think what's going to be alarming about gold is that we're not done going higher. I think gold needs a pullback. I think technically, here's some of the thoughts on the daily time frame. I mean, gold has essentially been the best performing asset the last 20 years. It is eclipsed. It's outperforming the S&P this year by a mile. It's like 4 times the performance of the S&P this year. And now over the compounding gains, I think it's averaged, I don't know, 9+% over the last like 30 years now. And over the last 20 years, I think it's averaged closer to like 18 or 19%. So it's outperformed the SPY, which is insane. And I think what's crazy, and nobody's talking about this, central banks are buying and holding gold like crazy. There is a big, big, big movement coming into gold. And what's nuts to me is like nobody's talking about it. Okay. Look, I know that we're at all-time highs. I think technically we have to have a pullback. We've had a long run here from the 200-day moving average. So we're talking back into, almost 500 bars away. So all I'm looking at doing on gold is, and this is what I've been doing the last like 3, 4, 5 months. I've had a gold position since pretty much this low. I've been riding gold for the last couple of years. Okay. So since we had this consolidation, this 2000 plus breakout, I was, finding support around 1700, starting my positions there, and then started to stack up above 21. So between support here and the breakout of resistance, I have buys and buys. That's my ownership positions. And then the rest has just been options, selling options, doing option spreads, generating income on this bull run. So this is my core position way down here. And, it might be tempting to take some profit, but something tells me that we should treat this like the asset that it is, the store value that it is, the potential fiat hedge that it is, just like with Bitcoin has this argument as well. So all I'm looking at on gold is, look, it's been a great run. I think if we go high, low, lower, high, lower, low, I think we find a trough and we dollar cost average in. We look for more upside. And I wouldn't be surprised. I listened to this last night on a podcast. Actually, I was driving about an hour home last night. And this was what was said. Gold can become unaffordium and silver can become unobtainium. Okay, so what this means is gold could become so expensive that nobody can afford to buy it. And silver is going to be so hard to get that it's going to become unobtainium. And this gold and silver ratio, it feeds the narrative of driving prices higher on both. So I definitely want to have gold and silver in my portfolio. I am interested in even as much as 20 to 30% allocation of my portfolio in gold and silver. I think there's a time and a place for Bitcoin. I think there's a time and a place for equities. But I think upwards of 30% between a gold silver mix. I like both of them. So I do have GLD, I do have SLV, I do have CEF and PHYS. I'm probably not at 30%. I'm probably closer to 15 to 20 for my managed accounts. But I don't think it's a bad thing to have. And any dips that we get, I'm looking to scoop up those dips. If you were not in silver, would you leap? Um, I mean, not necessarily. And the reason why is why not just buy shares? Why not just dollar cost average? If you leap, you get the leverage of options, but what happens if price goes sideways for 12 months? Right? If price goes sideways for 12 months, your options are worthless, aren't they? So if you buy shares and just dollar cost average, I mean, here's what I'd be willing to do. Deanna, will you let me know? Do we have a session at 10? Do I need to do a session at 10? I do. Okay. I'm seeing that right now in chat. I had two different links posted to me today. What's going on? Come on. Somebody posted Daily Profit Play. You're posting Newsbreakers. What's going on? Let me know. What are we doing? So I was going to say dollar cost average. Let's go to GLD. Okay. So just think about allocation. If you are willing to say, okay, look, I'm going to put $10,000 towards gold or $5,000 towards gold. Okay. So how do I do it? If I said 5K, I'll put in 1,000 here, 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 here. And then if we come back to a level of, support or resistance here, right? 1, 2, 3, 4, 5, level in. If price goes up higher, okay. Honestly, maybe to start with an allocation now and then look at this is 2, 3, 4, and 5, right? So we actually put a position now, and I know it's the top, and I know I don't like that. And if you buy the top, you're probably going to get a pullback. But if you dollar cost average, time is not your enemy. Okay. I would say this though, if you were willing to do a leap and we pull back, then I would say a leap makes some sense to get some appreciation. Also, a synthetic trade on this could be decent as well. If you have a margin account, have options. If you buy a call, if I buy a call, okay, and at the same time I sell a put, expressing to the broker that I'm willing to own the shares as well as buy a call, I get the leverage of the long call and I get the delta of owning the shares. So if you buy, I'll show you right here. If I did this on GLD, okay. If I did this on GLD and I go out, let's find the expiration here. Let's go. That's it. So I can go out to, January 2028. Cool. I'll go way out here. And GLD, I will buy. Let's see here. So let's buy a call. Okay. So I'm buying a call. And at the same time, I'm going to sell a put. So what does this trade look like? I pay a debit for it, but it's way cheaper. Okay. If I did this trade right here, if I buy a call and sell a put out to January 2028, I'm only paying $2,000 for the trade. Okay. $2,000. This asset is 338 bucks. That would cost me $33,000 to own 100 shares on cash, right? So if I can do a future, or if I can do a synthetic, I can own what is essentially 100 delta of GLD. And if there's price appreciation, it costs me a fraction. Like not even close. I mean, would you rather pay $33,000 cash or and again, this is a margin account. So realistically, this is probably more like 15K cash in margin, but, or a $2,000, option trade. But what do we need to have happen? Well, we obviously need price to go up. If I just bought stock, you can dollar cost average whatever you want. That's the nice thing about fractional shares. You don't have to buy 100 shares of anything. You can buy what you can afford. Okay. So we'll see. But synthetics are not a bad way to do it. So when I really like a position and I don't mind owning it, I do a lot of synthetics where I will buy the call, sell the put, and then I get the buying power is significantly reduced, and I get all the benefits like I was owning the shares. So you get a little bit more leverage that way with a fraction of the cost. And if you want to sell calls on top of that, you want to buy a put to make sure you have defined risk and have some downside protection, you can do all sorts of stuff with those synthetics. Okay. I just got a chart alarm on Lyft. 23. Oh, baby. I think I'm going to dump my position on Lyft. So Lyft is at 23 bucks. We're coming into this gap. Let me see if I can get some excess here. If I did a covered call at like 20 today, can I get some surplus? So let's go to the 19th. $20 call. I'm pretty much getting it at the money. Let's see here. That's a little surplus at 21, 305, 1950, 330. So an in the money cover call gives me pretty much fair value. Or I can just dump my position now and call it a day. Yeah, this has been a nice run. So Lyft, I think I'm just going to close out. Let me see. So Lyft has been a pretty nice run. We are at, I'm up 17 grand. I think I'm just going to take the profit. Or if I want to lock this in, so we're at 22.90. Let me see what I get. I might just put in a $20 call and see if I can get $3 for it. Let me see. So let me add in, let me find out all the accounts that have Lyft. So 1, 2, so this one. All right, so Lyft. I'm not really getting any bonus credit by putting in the cover call at 20. If I get it called, it's like I don't really want to take a risk of, okay, I'll put in a 22 call or 23 call. Look, if price fades back down to 20, I still want it to get called away. So obviously I'm sacrificing the upside here, or I just dump it at 20.95. I'll just take the profit. Okay, I'm just going to do this. I'm just going to take the profit. The cover call is not really going to add me any bonus profit. So let me do this on Lyft. Let's see if we can get out of here for $23. So close at $23. $23.01. I'm going to flirt with this $23 close. Closing profit at $23.03. Close at $23.02. Close at $23.02. 2302. Okay. 2305. Little bonus there. Nice. 23.13. 10. Nice little winner. 23.08. Oh, fudge. That's not what I wanted. Okay, so let me close this out. Let's make sure 23.10. Closed. Okay, I'm watching our daily profit play on the other screen, so we're fine. Just getting lift closed out for a nice little winner. This is part of Project Options Edge. We bought shares in this a while back. So that's a nice little winner. I'll close it out officially for Project Options Edge. We bought this thing at like 11 bucks. Something pretty dirt cheap. Filled. And then this one, I just need to get out of this one. So 23. I think I actually might have even made an extra $1 or $2 on this one. There. So it should have zeroed everything out. Okay. So closed out, lift. Let me check this on Project Options Edge. So pinch point, Project Options Edge, search, lift. So buying shares at 11.79. So I'm going to copy this one for trade management all the way to the bottom. So lift, we bought shares at 11.79, closing this morning for 23 dot credit. Nice gain per share. And on to the next. Nice winner. Okay. So we got that going on. All right. Nice. Also, that just bumped up my buying power a decent amount. I was committed for, I don't know. I mean, I don't know how many shares it just closed out. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 1,500 shares. So 1,500 shares at 23.10. Let's go $23. So it's about 34K in buying power back. That's not too shabby. I can apply that elsewhere. Cool. Nice little win. No complaints. Okay. Also got some other P&L coming in today. Wow. Baidu making a fat run. This is pretty fantastic. Look at this bad boy. Ooh, baby. Is anybody in this stock with me? I was brought into a bunch of roundtables here at Prosperity Pub and Trading Pub to talk China last fall. I know everyone hates China or doesn't want to trade China, but it has been finally a couple good stretches of wins here. I mean, I've had shares of Baidu since the lows at $80, and finally it's starting to pay off really nicely. That's a big rip on Baidu. So have some shares. It's finally starting to show what it's capable of. And, I'm going to set some chart alarms here at the 150 handle. This is my measure move. And what's kind of scary about the stock is we could be going not just to 150, but all the way up to 240. If this is a double bottom, This low, double bottom, come back to the center high. That's target one. If we break that and fulfill that, that's target two. I'm probably still going to be happy taking profit at the 150, 157 zone, but may Baidu continue to run like a hot tamale. So let's go 150. And measure move at 155. So I have been in this for a while. Yeah, maybe. I don't know. That's the thing is it never really mattered to me on the news because nobody likes China anyway. Nobody believes that their stocks are good. We thought there was going to be sanctions and delisting this year, and that is a risk. I mean, I even asked Jeff and Alex this weekend profit panel if you guys had any China exposure, and I think all of them said no. They both said no. I do. I like China for this exact reason. It's just a good technical trade. It's a low price to earnings tech play that I think has some good upside potential, and it's starting to pop up. So would I chase it now? No, I wouldn't. In fact, I would if this was I'm not in the trade. What do I do? Nothing. Or I sell some puts way lower and see if it offers up just income. But because I do have the shares 150 plus, I'm looking to take some profit. So hopefully it works out pretty well. FXI cover call, good. Poor man's cover call, got it. Cool. So all right. Let's do this. I'm going to switch gears here. It's just after 10 o'clock. I'd like to switch gears. Let's talk through just do a quick watch list and check on our daily profit play. So I think I'm going to set a take profit on all these. I don't think I have a take profit set yet. Okay, I'm going to set a take profit at the I think 150 to 155 is pretty solid. I'm going to go 155. So I'm going to close this thing out at 155. Close it out at 155. So this is a pending close. And let's just keep going down the list here. Okay, almost there. Okay, so all those pending orders to close out. That would be a nice run. I've had this thing since like $80. I've used a lot of options to lower the cost basis. So I think my break even is probably closer to $70 than it is, 80 plus. But I'm gonna let this thing run. Hopefully we hit those measure moves around 157. I get knocked out at 155. I could play the game of it hits my levels. I look at covered calls and try to get out of it that way for a little extra premium. But if it runs up another, $20, another $22, just close me out. I'm up 65K. Let it run another, $20, and that jumps up quite a bit. So good stuff. All right. So let's check on daily profit play, see how we're doing for today's non-directional trade. Price seems to be cooperating quite nicely. So today for the 17th, it is still break even, which is kind of annoying. And this is what we said. It's like we have like sticky volatilities today. If this is offering like 20, 30, $40, by 11 a.m. or noon, I think I'm just going to take the profit. Usually it's pretty neutral day going into FOMC. It's just a slow time decay. But I will close this trade out either way. I'm not going to hold this trade through FOMC. I want this to be, obviously the risk is defined. So worst that can happen is I'd lose 350. However, if I can pull out a winner, I want to pull out a winner. Okay. All right. So I'd like to switch gears here for the final 40 minutes. Any questions, any thoughts on the day? I'm trying to think. I'm going to be live on my YouTube session at 12:30 p.m., kind of a preview for FOMC. Would anyone like to close or anyone like to come back for kind of a bonus session today? This isn't in the schedule, but I'm going to do a bonus session. If you want to trade with me during FOMC, Deanna, can we come back to this room at 2 p.m.? Can we do this room again for everybody at 2 p.m. and just do like an FOMC session together? I don't think I'm in profit panel. I don't think that's a conflict with my schedule. Okay. All right, cool. So let's do that. So this daily profit plan room that you come in every morning with, let's do this again. Same link to get here. Let's do it at 2 p.m. Eastern time, and we'll do an FOMC. Okay. So that way again, I'm not looking to overtrade during FOMC. I just want to kind of talk through the price action, see what Jerome Powell says, read the highlights. But this is the highly anticipated news for the week and for the last several months. Fed watch tools like 96% baked in that we're going to have a cut. I think the Fed's not going to surprise. It's going to be 25 basis points, 94%. So, would they shock the market? Probably not. The tone of Jerome Powell in the press conference will matter. Price action ultimately is the most important thing. Okay. David, that's a maybe. It totally depends on the fill. I mean, from 2 p.m. onwards, it's probably okay. It just depends on the fill. And I don't know how wide you have to go on that. So we can look at it. Let's talk about it through the news. But price is going to be moving pretty quickly this afternoon from 2 to 4. Just be ready for that. All right. Okay. So we'll do this for today. Let me take a quick peek at my scanner. I want to see if we have any new scans from yesterday. So I pulled up a pinch point yesterday. Now we have 20 stocks. There's a couple. Ooh, Adobe's a new one. Adobe trading at 360. Let me look at the expected move here. This is maybe a pinch point trade. Adobe depends on the option strikes, but it's nice and coiled, so that's good. We are oversold with some divergence, but again, we could go down to some fresh lows. This stock has been in the decline. I know that Adobe's trying to get into the AI space a little bit. They're starting to pop up on some sponsored ads like, oh, look, I can Photoshop in seconds. It's like, yeah, cool. But why is the stock down, 50%? Probably because you charge money and it's a ripoff. I was happy to have an Adobe subscription when I was a student, undergrad and grad school for like $20 a month. And then after that, it's like, wait, if you're not a student, it's like $100 a month. That's insane. If it's your job, then yeah, your company should pay for it. But I think their subscription cost and model is terrible. Anyway, it's a trade. So we've got a breakdown. We've got a nice go filter on Adobe. So I want to price this thing out. We're at 360. Yep, I know. That's why I'm willing to trade it both ways. Like I'm not saying that Adobe is going to be fixed by AI. It actually might be a threat because of AI. So maybe going out to the end of the year, we're looking at maybe a $50 move. This isn't too bad going into December, January. We're only 5 wide on a $50 move, so maybe I can go up like 30 to 40 bucks here. So if we go 360, let me check this low. That low's around 275. That'd be a good low to go after. So if we go, let's say 360, let's go $40. That'd be 320. So 320. Okay, and then $40 would be 400. So 2 debit spreads, I pay 375 to make 5. It's not good enough. I pay 668 to make 10. That's not good enough either. That's a bummer. That's up 40 bucks out of an expected move of 50. I'll go up. I was going to say 45, but now it's up 50. This is a $50 move. I'm right at the top of the expected range. I don't like that trade at all. So that's 250 to make 10. And that's up $40. So why is this? That's better. Okay. So if we go $50, we get to 410, cover the expected move. I get paid on this trade. If we go $50, that gets me down to 310. That gets paid in this trade. If I can take this 470 debt, let's go 470 debit on pinch point. Let's try this one. I'm going to try a 475. As long as I'm paying less than $5, I like the trade, but hopefully we're not paying more than $5. I'm going to try a 480. Okay, new trade on pinch point. I'm going after a 30% take profit. So that's a 480 debit. So I'm going to go after a 625 credit on this trade. So Adobe. I'll set this one for a 625 credit to close. Okay, new trade on pinch point coming in hot. That is a 12/19 expiration. Buy the 400. Filled for 480 debit. Setting take profit at 6.25. Okay, so that trade's set and take profits in. So set and forget it. All right, let's do this. I know that we're going to get through this month and this quarter, and we're going to also see some earnings season that's kicking off here in just a couple of weeks. So when that picks back up, we'll be trading lots of earnings together. If you'd like to be doing that, a good place to do that is in my Newsbreakers service. We've obviously seen some, wild and crazy pushes and moves. We saw, AVGO hit all-time highs. We saw Google hit all-time highs. We saw Oracle pretty much break the market. It was up 40% and got into $1 trillion company in one giant move. It's been fading since, but kind of a crazy stab there when this thing just blew off the top. 344 from a move that should have been about $21, with the market maker showing 21 and my average earnings showing 28, and the thing went up $103. So some of these trades are, they're so random, but I tend to price in some pretty good probabilities. My Newsbreakers service. We take a look at our spreadsheet here. Newsbreakers, we're winning 71% of our trades. And, the average trade is basically I'm trading, earnings typically both ways. It is a coin flip. But I price it out based on some really good data. So it's, what's the last 15 earnings reports? Do they tend to hit expected moves? Do they not? It's very methodical, and we just win. I mean, the model portfolio is up 20 grand, so it adds up. And obviously, there's no shortage of high flying stocks and high flying earnings every single season. So when we come into the next 2, 3, 4 weeks, when it's all of a sudden it's led by financials, then we have Mag 7, then it's all AI stocks, and there's tech, and is money getting thrown in? Is money, do we have a broader market that's going up or down? We'll find out, but there's going to be a lot of exciting trades here in the next maybe 3, 4 weeks. So that being said, I want to move into this year for the final bit, and then we'll come back and trade together again at 2 p.m. today. So just real quick, spot checking on daily profit play. I don't know why these are backwards. I'm looking at the 17th for today's 0 DTE. So it's still break even, which is annoying. I don't know why. This is showing a 155, 160. So it's upside down just a couple of bucks. But I'll watch. Hopefully, by the time I'm done with this session, this thing is showing us some profit. Okay. So let's go through this. Profits and performance shown are not typical. We make no future earnings claims. This is our legal stuff here, obviously. Majority of trades shown. A lot of examples in this were pulled from backtest. But I've been trading my Newsbreaker strategies live since basically last fall.